Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with CJ Konstantinos. CJ, thanks for joining us today. And I was telling you before we started, you were very gracious. We switched this time around about 6 or 7 different times. So we were playing hopscotch on the calendar, and it's awesome to spend some time with you. We just missed each other at a conference in wherever that was, Fort Lauderdale. But lots of good stuff going on. So thanks for being here today.
Yeah, well, thanks for having me. I'm excited to be here, and I'm actually really excited that you're getting this spun up because the level of quality of content of education has really been oversupplied, I think, in the space. And you're not one of the people contributing to the oversupply. We're bringing it back to quality, and it's just so important. Education is a huge first step, and Bitcoin may be the hurdle rate, but education is certainly the first hurdle you got to get over to pique that interest.
Definitely. So you are the founder of People's Reserve, and I'm excited to get into that. But let's start with Bitcoin Treasuries and maybe even zoom out and throw it in reverse to Gamestop, right? I'd love to hear your view on like GameStop back in the day versus what we're hoping they're going to, it's pretty apparent they're going to recreate themselves now as a Bitcoin Treasury company. I guess walk us through just how you see all this coming together. There's a lot of moving parts, especially just the announcements of additional Bitcoin Treasury companies and all of the activity and analysis and, kind of fast moving announcements sometimes around all of this.
Yeah, it's been amazing to see. And I think, all of this action is really based around the fact that people, not just the American people, but people of the world have been disenfranchised. They've been left behind. The 1% own the 95+%. The 1% are the benefactors of the cash flow mechanisms and vehicles. And everybody else is stuck clocking in and clocking out. And for the people who I talk with, their main goal is to escape the rat race. They don't want to go work for the man. They want to find a way to hit it big. And whether that's through hitting it big through a dividend strategy, an income generation strategy, or just real estate investment cash flow. I mean, it's always about freeing up their time and energy, because ultimately, even more so than Bitcoin, it's our personal time and energy that is our most valuable asset. We have a limited amount of it. We cannot buy or create more of it. And we want to get the most out of life that we can. And when you look at the dynamics in the marketplace today, they are structured in a way where there's a huge barrier to entry. We don't have a complete democratization of access to investing. Even right now, when you have accredited investors and qualified investors versus just the regular person, all these types of regulations and rules that honestly were probably created in good spirit and goodwill, long term, I think have contributed to all of the charts that we see on WTF happened in 1971, which started with removing money from the equation and depending on a debt-backed currency. And now that the people have kind of been ushered into this system and they are stuck working and trading their time and energy for a currency, which is a debt derivative instead of a money, which is a derivative of equity, of proof of work. Instead, they trade their time and energy for proof of promise. And the next question is, how do I get ahead? How do I escape this? And I think that really came to a point with GameStop, because the community that was formed around that, seeing how the big Wall Street firms were short and kind of just trying to exploit the system with leverage and reap the rewards of causing damage within an ecosystem and within certain companies that they pick and choose the winners and help drive those winners. And then the everyday person loses. To see the community of just investors come up around that, I think was a catalyst. And I actually think that catalyst has shifted. Even though GameStop has now entered the Bitcoin game, I believe the energy of that catalyst actually did switch to MSTR True North. And what you guys do over there is fantastic. And, we were talking before how maybe the GameStop community is like a cool high school club, but True North is a professional club. And it's a professional set of people who understand what is happening in the marketplace and who are grasping the financial engineering that's being done by Saylor. This is going to go down in history as some of the best financial engineering ever. that we've ever seen. And what he's able to do by creating these new products and services built on top of the tools that those with access to US capital markets have is really creating the opportunity for the everyday person to participate in some call it a speculative attack, right? That's the technical name. It would be a speculative attack on the dollar. I like to call it defense because it's we're not the ones devaluing the dollar. We're not the system that's driving the liquidity, naming the interest rate with price controls, and then causing massive amounts of inflation through waste, fraud, theft, abuse, you name it. We're the ones who have to deal with the consequences. And finally, we have somebody in Saylor who's leading a pack and saying, you know what? I understand the dynamic. I understand what money is. I understand what currency is. I'm going to borrow this inflating currency that loses value over time against my hard money, my deflating money that's engineered and strategically designed to accrue value over time. And by doing so, I'm going to empower my shareholders. I'm going to give them financial freedom. I'm going to give them the hedge that they need against the system that's extracting value from them. And I'm going to deliver value back to them through the Bitcoin per share model. And that, whether it's GameStop or any other Bitcoin Treasury company, the bigger picture for me is that movement, the awakening of the human spirit, saying, that's it. I've had enough of this. I'm now going to put my money where my mouth is. I now understand that maybe my vote counts. Maybe my vote doesn't count. Who knows? That's up for debate still. But the vote I take with my money, it absolutely counts. So I got to make sure I'm putting it in the right place and backing the right companies who want to empower me and deliver value to me instead of extract value. So I couldn't be more excited that we've kind of progressed into this new age, this new era of consciousness where people are becoming aware that there is fraud, theft, and abuse, that the value that they bring into the economy through their hard work and energy is actually being extracted from them. And we need to find a way to protect it. And that's really what gets me fired up, that other people are coming to notice this. And unfortunately, they're really coming to notice this because it's getting worse and worse. The value of extraction, it's not going down and down and down. The level of extraction is going up and up and up. And the more pain there is, the more waking up there is. And that just might be the rule of the universe. But I couldn't be happier that people are waking up, because it's much easier today to talk about Bitcoin or even having a legitimate conversation about putting Bitcoin in a company's treasury. Because when I first started, it was magic internet money and no company wanted to hear about it. And it was just a personal level thing. So the fact that we are where we are now, where we have publicly traded corporations in the multi-billion-dollar stage and level heading to trillion-dollar levels, and then sovereign nations mining Bitcoin and strategic Bitcoin reserve in the United States of America, and hopefully the Loomis bill getting passed where we start to accumulate the Bitcoin. And then further, maybe even a Bitcoin recapitalization fund so that we can leverage Bitcoin in all of our economic, fiscal, and monetary policies. The progress that we're making, all starting with this little wake-up call, really coming to fruition through GME, accelerating through True North and MicroStrategy, now going to the next level with other companies adopting this strategy and people waking up. Has there ever been a more exciting time in finance? I don't think so.
When you said the problem's getting worse and worse and worse, I thought of, I had some business today on the Upper West Side, and I was walking down around the park. And as I'm walking down Central Park South, I see one of these kind of like 3-wheel carts, right, where they pedal and they take people around. And like we all know, New York is not like an inexpensive city, but literally the per minute charge per minute for this guy to take you around, right? You have 1 or 2 people sitting in a seat and he's pedaling you around. $8.99 per minute. I looked at that and I'm like, my rose-colored glasses were like completely shattered. I mean, that wasn't like the moment for me, obviously, but I'm like, that's insane. Like, how many minutes? Like, you would think you'd be there for what, 5 minutes, 10 minutes, 20 minutes, an hour? I mean, just do like the math on that. Like, some guy's taking you around on a bicycle for like almost $10 a minute. That really. So, yeah, I like, where does all of this go? And what's your take on the power of the meme? I feel like MicroStrategy, now strategy, is kind of been certain things have been memed into existence. GameStop, like, correct me if there's something before that was, kind of the maybe most recent meme and first meme stock for anyone that's maybe just going back 5-10 years in pop culture. Have there been others? And how does this interplay between GameStop and strategy and any, like, are we in this period of time where it's really just a couple of quarters or maybe a couple of years where you can have a couple of front runners, because you're not going to have dozens of companies all effectively memeing themselves into just being able to do things, or will you?
Yeah, it's actually, I think, as somebody who's been involved in markets for a while, the psychology of the market cycle is evident and clear. So there's definitely a psychological component to investing and to where people want to put their money and hold their money and become that base layer of demand, right? So I think what's interesting with memes is that everything tends to revert to the simplest form of something. So, and the best speakers, the best teachers are always able to take the complex and bring it down to the simple, right? And even when you're doing math, even when you're doing calculus, it's only ever to get it down to the algebra so that you can get it to the answer. So I see the meme as like the simplest form of an idea or an argument. And as long as your company represents a certain theme or a certain mission, there's always a way to bring it down into the simplest form, which amazingly, and I don't know, blame it on YouTube shorts or TikTok or whatever the hell you want to call it. But God, I try to keep my kids away from that stuff because it really just, I remember as a kid, like, I'd love to read books. And yeah, I played my fair share of PlayStation games and stuff too. Don't get me wrong. And I played sports all the time. I wasn't like a bookie or anything, but I also read books. I read the Harry Potter series, the Left Behind series, and you get so much more from a book than you do from a movie. But you talk to some of these up and comers today and it's like, oh yeah, that movie was good. And they don't even know that there was a book. And I think that, the psychology of the human mind is actually changing, and arguably it's not really changing for the better. And the meme is able to be like the most powerful representation. They say a picture is worth 1,000 words. And the meme is the perfect example of that. Like, if someone could write 1,000-word essay, nobody reads it, nobody learns anything, but someone makes a meme over that situation and it goes viral and it becomes trending and people are talking about it. So I think that's a really interesting tool for companies to use. And perhaps they will be able to continue to use that, because not every company, although companies might be cash heavy and some might be suited better to take action than others, if they don't understand that dynamic, if they're not connecting with that base layer of demand, then they're going to have issues. And I think that's what's great about Bitcoin. The base layer of demand on Bitcoin grows every single day. Michael Saylor is happy buying Bitcoin at the tops and perhaps maybe one of the best top buyers that there is, but he doesn't care because he knows that Bitcoin is a savings technology designed to turn the current top into the future's bottom. And with that mindset, he's able to leverage the engineered design of Bitcoin to empower his shareholders. And that comes out through different forms of memes and everything like that. So that's why I was going back to what we originally said, what goes on with education. If we can simplify Bitcoin education into memology or whatever we're going to call it, I mean, we might actually be more effective, especially with our generation and even younger generations. So I think we should continue to pursue understanding the base layer demand mindset for people who are buying MicroStrategy shares, people who are lending into the convertibles, taking advantage of the volatility between all three of those tools, people who are buying GME, and people who are interested in Bitcoin Treasury companies. Because ultimately, where these companies go, and I think the market really does, the sophisticated in the market absolutely understand this, but the vast majority are here to get wealthy and to escape the rat race. But what they don't see coming is that you don't just buy a whole bunch of Bitcoin and hold on to it forever. When Bitcoin becomes the base layer money of the entire system, then you're way more than just a Bitcoin Treasury company. You're the everything company, because everything is going to be based on Bitcoin equity. Bitcoin becomes the new foundational layer, the layer one of the entire, or even layer zero of the entire financial system. And right now that layer is made up of treasuries. There's no doubt that treasuries and bonds, let's call it bonds, doesn't have to be necessarily a treasury, But bonds are the foundational layer of the system. And the problem with these things is that they're promise based, right? A bond is a promise that you're going to produce and that the fruits of tomorrow's production will pay off the promise that was made from yesterday. But Bitcoin takes a different tact, and it's engineered, it's designed to say, no, promise isn't good enough. We want work. And you take this proof of work and it becomes this equity layer. And when you can draw debt from an equity layer, you're in a much stronger position. You're in the pyramid that's right side up instead of upside down. So while debt remains our foundational layer, that pyramid is upside down. And the weight of debt and debt derivatives are going to continue to crush the financial system and cause the ongoing problems that we continue to experience. But when we bring Bitcoin in as that foundational layer, you flip the pyramid right side up. And all of a sudden, the physics start to make sense again, because all these debt derivatives are backed by equity. They're backed by proof of work that's already been completed, by value that is there and that is real today. And when you build a business on top of that equity layer, you're much more than just a treasury company. Right now, you're a treasury company because nobody really understands the long-term implications of what they're hodling and what they're building. But when these systems get built out and we move beyond just the monetization of Bitcoin and into the financialization of Bitcoin, that's when these companies are going to start to evolve and turn from Bitcoin treasury companies to Bitcoin banks and underwriters and the whole 9 yards. And that future, I believe, for MicroStrategy is a multi-trillion-dollar future that can't necessarily control the whole field of finance, right? No one entity can do that. But you're going to be one of the biggest players in the world because you have one of the biggest piles of Bitcoin. You own the pristine collateral, and those who own the collateral will make the rules.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. Do you think it's fair to say these Bitcoin Treasury companies are kind of in like accumulation mode, and then maybe there'll be a second phase that's like, what are we going to build on it or do with it? Or how do you think about the place and time that we're in right now and how that might um, stay the same, or or change moving forward?
Yeah, I love that question because it shows you how early we really are, because we're absolutely in the accumulation phase. But when I first started in Bitcoin, it was magic internet money. Even myself, I didn't really know what it was. Honestly, I just bought it to get rich, to make money, to profit. And it wasn't until I got rattled by the markets that I actually had to really dive in. And my background, I got into mining and created the Bitcoin fair value algorithm. Then I got into market making and DeFi. So, that brought me to where I am today and what I know and understand today. But back then it was like, I don't know what this is. And I think a lot of people feel that way. They're like, they don't truly fully understand the technology, but they know it's important. They know it protects and stores value through time and space. And they know that there's nothing else that really does it the way Bitcoin does it. Yeah, gold will do it. Other commodities will do it. Real estate does it, but not at the rate of Bitcoin, because Bitcoin has that absolute digital scarcity. There's no way to increase the supply. And this is the first time we've really been able to do that with a money, right? Yeah, you have the Mona Lisa, you have this, you have that, but now we have a money where the supply can't be increased, and people understand the value of that. But what we build on top of that is even more exciting, and I think that's where we are right now. We Over the last decade, call it, Bitcoin has been in its commodity cycle. It's been traded as a commodity. It's even been treated as and arguably right now is still treated as a risk on asset. As a matter of fact, it's actually nice to see that the stock market is down and Bitcoin is actually holding pretty strong. Because usually the stock market goes down, Bitcoin goes down 2-3 times the amount in percentage points that the stock market goes down, but it's holding strong and stocks are down greater. So I believe that is a sign that we're seeing the maturation of Bitcoin. We're moving out of the commodity cycle, which we saw through these first 3 halvings, where price trades relative to cost, and miners drive a lot of the liquidity because they're the only forced sellers, right? Savers of Bitcoin, we don't have a cost basis, so we just save what we can. But miners, some of them have a pretty large cost basis. They need to cover those costs, and especially before the miners became public. So, you talk about diminishing returns. The reason that there was a lot of diminishing returns, these publicly traded miners, they have a fiduciary responsibility to lock in profits. You can't let your cost of production be relative to the market price, minus 2, 3, 400%, because you're giving up those profits. When you have that type of profit margin, you have a fiduciary responsibility. And then if you don't engage in that responsibility, you can actually be held liable. So some of these miners have come out with their HODL strategy so that it's very clear, like, hey, we're going to use different tools that we have at our disposal, like ATMs and different ways to raise money to cover these costs, because we want to hold the Bitcoin in the long term, because we believe in the long term of it. So that mechanism of going from private OG miners to then publicly traded miners led to this diminishing returns. And then through the commodity cycle, we saw that profit margin get squeezed and squeezed and squeezed. Hash rate today, again, all-time highs. That's the real signal. Don't look so much at price, look at hash rate. As long as hash rate's going up, that's telling you that demand for the network is there. And we go through that price discovery process in a commodity cycle. But I believe all of that culminated in the monetization of Bitcoin. And to me, that deal was sealed when we got the strategic Bitcoin reserve. And I know right now it's only by executive order and it needs to be made law. I get it, but this is a big step. It's a big stepping stone for Bitcoin and its recognition as an asset class. And now that we have the SBR, I would say that people who follow closely would agree, Bitcoin has been monetized. It's gone from this digital asset, this magic internet money, to digital gold. And that's a huge, huge step. And I think right now with gold at new all-time highs, perhaps market cap parity between Bitcoin and digital gold is somewhere in like the $700,000 to $900,000 per Bitcoin range. So I think we'll be heading there rather quickly. And a lot of people think we're going to stop at that single family home range around 400,000 to 500,000. We might take a break there, but ultimately we're heading to gold parity because we have digital gold and we've been monetized. The next step, which I think we're transitioning into right now, which is just part of the maturation of the marketplace, is the financialization of Bitcoin and the entire asset class, which is what we do at People's Reserve. Bitcoin is going to be integrated. It's going to be fused into all different types of debt products. Any type of debt product you can imagine, Bitcoin will be fused into it. And it changes the whole dynamic of the marketplace. It changes the risk reward. And what's happening is we're going to move into a money cycle. And as we move from the commodity cycle to the money cycle is always based on credit, right? Some would call it like a business cycle. But if you look into these concepts, they're pretty much the same, whether it's equities, SMBs, or even a commodity. So that is the big deal. And what we saw happen to real estate after they dropped gold in 71, real estate, some would argue there's a monetary premium in real estate. I would agree. I think that that monetary premium is going to be drained into Bitcoin. But there's also a financialization premium because you can use your real estate as collateral. So anything that you can use as collateral has this natural financialization premium or monetary premium baked into it. And ultimately, what lenders want is the most pristine form of collateral. And historically, that's been U.S. Treasuries. U.S. Treasuries are because there's no credit risk, right? If they can't pay you, you don't have to worry about not getting the money. They're just going to print it and pay you. And that there was really no problem with that until 2020, because after 2020, it was like, yeah, they're going to print and pay me, but what the hell am I going to be able to buy with it? Like what's if I can't save in this and I can't store value in this, and my business plans are getting pushed back from 5 and 7 years now to 10 and 12 years because of the lack of purchasing power in my savings. And I was supposed to build a factory, but now I gotta run my business and save revenues for another 4 or 5 years to build that same factory because of the dilution. What kind of savings tool is this? And it loses the demand. And that's it. The fact that people like Byron Donalds, who served on the Financial Services Committee, I've spoken with him about this. They're actually talking about lack of demand on treasuries. Bitcoin Policy Institute recently published an amazing report about Bitcoin bonds, which we've been working here at People's Reserve, not necessarily at the federal level, but at the state and municipality level, with the same mechanisms to integrate Bitcoin into bond offerings so that you don't have to mandate companies to buy your debt. People will actually want to buy. You have organic demand because of the proper risk and reward. And that's what Bitcoin does. And this financialization process will evolve Bitcoin from digital gold to pristine collateral. And once that understanding takes place, I think we accelerate significantly. And that's when it's become extremely evident that these Bitcoin treasury companies are not just hodlers of Bitcoin. They're actually the guardians and facilitators of the future financial system, which will be, in my opinion, a hybrid system that has the existence of currency that's state issued, but also money that's protocol issued and secured by proof of work.
As you've said, we've witnessed Bitcoin being adopted by individuals. And then some corporations, but you could argue mostly zombie companies. With the ETFs in January of 2024, you saw institutions come in. You've seen El Salvador, you've seen other countries at least mining Bitcoin, if not putting it on their balance sheet publicly. So you have this individuals, corporations, institutions, countries, but you don't really see non-zombie companies putting it on their balance sheet as of right now. Do you see it ultimately playing out in the order of like individuals, zombie corporations, institutions, nation states, and then the rest of the corporations kind of like run to catch up? Or how does all of this play out?
Yeah, that's a great question. And that's one thing I love about Bitcoin. It's typically from the bottom up, and it's typically created from a need, right? It's like when you build a good business, you don't just build a business for the heck of it. You say, what problem is my customer facing? And then you solve that problem. You don't build a solution and then look for a problem. The problem must be identified first, and then you look for a way to solve that problem. And that's why Bitcoin works the way it does. The individual understands that the value of their time and energy is being extracted from them. They have a big problem. The state, which they cannot make war with, is stealing from them. And because of the dynamics of where we are right now with the death debt spiral, it doesn't matter if you higher interest rates, lower interest rates. I mean, we're $37 trillion in debt with $220 trillion in unfunded liabilities. They got to print. I don't care how effective Doge is, they have to print. So the individual is faced with an enormous problem and then finds a solution for that problem. And it starts with the individuals. And then it moves to the zombie companies because they understand debt better than most because they've taken on the debt to build their company. Their company isn't generating the revenues to pay down principal. They're making their interest payments. They're barely making it through, but they're a zombie. There's no growth, and they're lucky if they stay alive. They need something new to pop or to power the asset side of their balance sheet. Cash flows, revenues aren't doing it. The business model isn't cutting it. And then Bitcoin becomes the solution to their problem. But the big boys who don't have this problem because they're selling hundreds of billions of dollars worth of products and they have hundreds of millions of dollars worth of revenue, they don't feel the pain that much. They're successful. They're the big seven. They're whatever you want to call them, and they don't understand the problem as well because they're not facing it. And that's one natural economic mechanism of Bitcoin that I love. It's just like you don't really magically stumble upon Bitcoin. You first have a problem, and then you understand that Bitcoin becomes your solution. So I do think these companies have an advantage, which is actually funny to say that the zombie company has an advantage over the established company with strong revenues and good cash flow. You see some companies sitting on billions of dollars in cash, and you're like, what the, I don't care if you're holding out a money market fund or cash equivalents, like nothing's performing at 60% CAGR, but they don't care because they keep selling products. They keep having the cash flow. They use that cash for buybacks to enrich themselves and drive value into their shares, or at least into the price of their shares. So all of that mechanism, it kind of works for them and they don't have a problem. And it's the companies that face the problem, like, Saylor's MicroStrategy, they faced a few problems before they became a Bitcoin Treasury company. And even now, the traditional analysts will look at it and say, well, where's the cash flow? Where's the revenue? This is high. Someone's taking out debt who barely has any cash flow. This is risky, right? Like without that cash flow element, it's almost like a fiat mind disease. 60% CAGR isn't good enough. You need cash flow. And they have to figure out a way to get beyond that without facing the problem first. So I hope that, platforms like yours and the Bitcoin community continue to educate and teach companies. And I think there's some great companies out there, especially now that we're getting to the level where institutional custody setup is critical to the adoption of Bitcoin on a regulatory level, so that things are done in a way where it's just like, hey, it's not just sitting on my counter. Like the CEO doesn't have $200 million in Bitcoin like sitting in a ledger where he can sign a transaction. Like there's multi-sig, there's institutional setups with qualified custodians that put keys in different international zones around the world. I mean, it's getting very sophisticated. So I think the proper steps are being done by the Bitcoiners who understand the problem better than those who aren't facing the problem. And the companies really have a chance. They have an opportunity now to escape that zombie status, to escape really financial death that they've got stuck in through cheap credit, right? Because they financed a business model that wasn't really based off of the free market price discovery, right? Like if it was free market price discovery and the demand on their products and services was so much that they needed to expand the supply, then the price would be going up and profit margins would be going up. And then that profit would be reinvested. But instead, it was just about scaling. Let me borrow cheap money and scale, borrow more cheap money and scale, borrow cheap more money and scale. And then all of a sudden you scale to the point where supply overpowers demand. And now revenues aren't enough to make up for how much money you've borrowed. So it's all a symptom of the fiat mind disease and manipulated credit. And that's what I love about Bitcoin. It's not just about free market money. It's about free market interest rates and free market yield curve. And the companies who understand this revolution for what it truly is are going to be in a position to leverage that reality at a later time, way beyond the original business models that they established.
The Bitcoin for Corporations Conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. One more question on kind of present day macro and treasury, and then we'll pivot. If you take the politics out of it, where does all of this go with the current administration? I posted a day or two ago that, basically if we can only do so much to rein in and solve the irresponsible spending of government, then the only solution is to basically be irresponsibly long Bitcoin. So, my thought going into, tariff Armageddon Day, whatever we called it, Liberation Day, was, okay, we can only do so much on Doge. We can only do so much on tariffs. And Besant was even on mainstream media saying, like, look, do not retaliate, right? This is the ceiling. We got to figure out where the floor is. I don't think it's that murky. It's just any lack of certainty is going to cause the markets to not really be in a good mood. They're going to be jittery. They're going to be, not in free fall, but they're certainly going down this week. Is that, in your view, where we're going? It seems from all of these different announcements across the board that like Bitcoin is the common denominator in where this administration is going. What are your thoughts on the spending, the tariffs, and all roads leading to Bitcoin?
Yeah, great question. I think, it's so tough because we're trapped, and most people don't understand that we're trapped. They think that the Fed can raise interest rates, lower interest rates, and there's always some type of escape. But everybody knows that saying that you kick the can down the road, eventually you get to the end of the road. And I believe, people have said in the past we're at the end of the road, and we weren't. But I really feel like we are at the end of the road. Not because of the aggregate dollar values. Like the values are already just beyond insane when you're talking about hundreds of trillions of dollars. It's just ridiculous. But really comes down to trust. And in my studies of currencies, whenever you go from inflation to hyperinflation, although the traditional economists would like to mathematically define that for you, I think what's the same through all space and time, whether you're talking about ancient civilizations or even more modern societies who've experienced hyperinflation, the one catalyst of moving from inflation to hyperinflation is trust. And right now, this regime, that regime is probably not the right word, this strategy that's being applied, this economic reordering, I think is how Besant put it before. This economic reordering, if it doesn't work, then people could actually lose trust. And if people lose trust, we will go from the inflationary depression that we're in right now to a hyperinflationary depression, or I should say inflationary recession that we're in right now, to hyperinflationary depression, because trust will be lost. And that's what is being required right now through this tariff strategy. I think Trump is an amazing business person. And I think that his strategy with tariffs is more about the art of the deal, right? You've seen some people on X kind of go crazy saying, where's he getting these numbers from? You can't take imports and divide it by exports and then just divide it by 2 and say, now we're even. You can't, where are you getting your numbers from? What's the math here? But it's not about the math. It's about the art of the deal. And with Trump, you gotta, it's like if you go to a yard sale and I'd pay $5 for that item. And then someone comes up to you and says, oh, you interested in that? What will you give me? Yeah, I'll give you $3. I can't do three, but will you do seven? Nah, but I'll tell you what, I got a five here, and I'll give you the five. Well, boom, you just got what you wanted for, and you paid what you wanted for it by playing the art of the deal. And I think that's what Trump is doing here. We've been in a, and I will call this a regime. We have been in a regulatory, state-sponsored regime in the world of finance for quite some time. And all of the other countries have become complacent and have just become used to it. And Trump knows he cannot use the Fed to try to shift the sands and shift the foundations. He has to do something radical. I mean, and I think that's what these tariffs are. They're radical, but it's not radical self-destruction. It's radical art of the deal. It's about getting these
Mm.
countries to come back to the table. And if the countries don't come back to the table to negotiate and figure out how to create a mutually beneficial relationship that can be long lasting for both the American people and their country, which I do believe that's going to get done, and I do believe that that is the goal of the Trump administration. But you got to get them back to the table. And when you're at the status quo, nobody's coming back to the table. Nobody wants to negotiate. And some of these countries are going to try to fight back. Like you said, Bissent said, hey, don't do that. This is not where this is going to end up. This is how the game starts. Be more focused on where the game ends because we can build from a stronger foundation. And I think if the countries don't negotiate, then the big corporations of those countries are going to negotiate. And I think Trump is smart enough to know if you have a big corporation, if you have an institution that is global and is involved in different countries that perhaps are kind of fighting you, they're going to come to the table and say, look, well, can you exempt our products? If we work with you and we invest in the United States and we move part manufacturing to the United States, will you exempt our product? And I think Trump is wise enough to say, yes, absolutely. Because what that does is now the state leaders of that country, they lose power because the big corporations come to them and say, if you don't negotiate and do it properly, we'll go negotiate for ourselves. And then that's going to force them to take action. And that's the goal. The goal is to get these countries to come back to the table and try to figure out how can we have a more mutually beneficial relationship. And I think that's an interesting concept in itself because we print money and then send it to them and then they send us real stuff. So I'm not really sure who's really getting played over here. More are Americans getting played over more, or the other? And then but when we're printing money, and then Americans are losing the value of their purchasing power because wages aren't keeping up with prices, then that hurts too. So both sides are getting hurt. And I think Trump is just saying, look, I can't use the traditional mechanisms that would be used when these different entities would actually support the administration. Right? When Obama was in, there wasn't a freaking whisper about raising interest rates. When Biden was in, they took all the possible steps that they could to support markets, even though that they were doing their quantitative tightening and they were doing raising of the interest rates. They still found ways. They allowed him to almost completely deplete the strategic oil reserve to fight gas prices to help bring down inflation. So there's one type of person where the system will support you and work with you. There's another type of person or administration where the system is going to fight you. I think Trump is in the position where, they tried to take his life. So they're not trying to work with him. They're trying to get rid of him. So he has to use some tools. He has to take some strategies from his life and his business experience and kind of use these ideas to try to get what he wants in order to make America great again. So I think the dynamic there is interesting, but I do think the purpose is to strengthen America. And I do think Bissent is right. He understands the problem intricately. So does Lutnick. And they've both come out and said, don't panic here. This is where we start, right? The negotiation process will continue and then we'll figure out something better. And if we can do that, I think it's going to be a massive benefit because alongside of that negotiation, you also have Doge, right? So you kind of have Trump looking on the asset side of the balance sheet and saying, you know what? We need more production. We need to be able to produce over here. We need companies that produce revenues. Those revenues get taxed. That increases our tax revenue. That increases our income, right? The government's income, the government's cash flow is in the form of tax receipts. So you need to create an environment where tax receipts can thrive, but not just from capital gains from the stock market, because you create more wealth inequality. And we want to bring it from Wall Street back to Main Street. So this is unbelievable. I honestly cannot believe that we are alive and watching this with our own eyes take place. Like The foundations of finance are shifting, and the administration leading the shift has embraced Bitcoin. They're open to make the United States the crypto capital of the world, which to me, everybody knows I'm a Bitcoin maxi, which means Bitcoin is money. Nothing can compete with Bitcoin as money. And if it tries to compete with Bitcoin, it's a scam. Stay a million miles away from it. However, crypto exists for a reason, and that's to help evolve Bitcoin from digital gold to pristine collateral. That's not to compete with Bitcoin. It's to complement Bitcoin. And when you talk about decentralized finance, where we have the internet economy, the only economy in the world with true free market interest rates based on the supply of money and the demand of loans and the perception of counterparty risk. We're the only economy in the world that a small group of men doesn't use communist Marxist price controls to state the price of money. And Trump is embracing that and saying he wants to make us the capital of that. And we're shifting from people call it free market. It's not free market. It's a quasi free market. And he wants to shift us back into a true free market. But to make that shift, you have to have a country that produces and consumes, not just consumes. So, I mean, what's going on right now is going to affect us and our children and their children. And that's why it's so amazing to see with our own eyes, because it's so powerful that they're doing that. But the last part I want to add to this is I don't think it's going to be enough. I don't think what Doge is doing is going to be enough. If they can cut $1 trillion, fantastic. The problem is we're running $2 to $3 trillion deficits. So if you take off $1 trillion, you're still running $1 to $2 trillion deficits, which is a ridiculous amount of money. And then the second thing is, if you get companies to reinvest in the United States, and over the long term, you have more companies producing here and selling from here, creating tax receipts, increasing the revenue side of the balance sheet or the asset side of the balance sheet, it's going to be nowhere near enough to keep up with the growth of the liability side of the balance sheet because of the unfunded liabilities, 220 trillion. So we're stuck, and we need an extra element. We need another variable to be thrown into the equation. And to me, that's Bitcoin. That's where this all leads to Bitcoin. All macro leads to Bitcoin, because Bitcoin is the asset that these countries can put on their balance sheet that will enable the asset side of their balance sheet, the growth of that asset side of their balance sheet, to outpace the growth of the liabilities. The United States borrows this money, and all the Keynesians will tell you, we borrow the money, we spend it into the economy. It works. Yeah, but if it worked, then our debt to GDP would be stronger, not weaker. So we're taking these dollars, we're borrowing them with interest, spending them into the economy, and then getting a return on those dollars that's less than principal and interest. Therefore, debt to GDP becomes worse and worse and worse. So we need to borrow the dollars, but we need to spend them into assets that are going to enable the asset side of our balance sheet to outgrow liabilities. And Bitcoin is the solution. Bitcoin is the answer. And that's what I think is so important for legislators to understand, not just at the federal level with the Strategic Bitcoin Reserve and hopefully eventually the Bitcoin Recapitalization Fund, but also at the state, city, and municipality level, where we can integrate Bitcoin into bonds, into debt and credit products, empower the people, and drive value back into the financial system. The financial system, in my opinion, probably died in 2008, needed like another shock in the chest during the 2019 repo crisis. Some people think that markets crashed in 2020 because of COVID. I would disagree with that. I would say that in 2019, the banking system really, the plumbing in the banking system got clogged. And by the time we got to early 2020, it was evident that if trillions of dollars were not printed, the entire system would collapse on itself. And it just created this opportunity for an event, or it's the Hegelian dialectic. This happened so that everybody asks for this, so that we can give them what they want, but that gives us what we want. And that was the excuse to print the most money we've ever seen printed before. And I hope we don't get into another situation where that happens. But if just one wrong move is made, it's going to happen. It's going to, and my fear is that it's the zombie economy. So we talked about earlier about zombie stocks, but the zombie economy is what's most scary. And the zombie economy is actually the biggest driver for putting Bitcoin on the balance sheet, not just for the individual or SMB or corporates, but even at the sovereign, the state and national level. Because it's the economy itself. Everybody listening to this podcast knows, especially if you run a business, CPI is not 2%. Prices are not going up 2%. Guys aren't pedaling bikes in New York City for $9 and $10 an hour or $600 an hour almost, right? For um, a small little 2% CPI. The real CPI, business cost, input costs are up around 10%. And that's the real cost increase that we're seeing. And the problem that then is created is that even when interest rates are at 4.5%, when prices are going up 10%, you're still losing purchasing power. So you need something that creates a real positive rate of return. Bitcoin creates the real positive rate of return. The economy needs a clutch that it can lean on, because when you take CPI, when you take 2%, and many people don't know this, but there's nominal GDP and real GDP. And the difference between nominal and real is taking out the price increases. So when you take a CPI at 2%, which inaccurately defines price increases, and you subtract 2% from nominal GDP, then GDP looks great, because like, oh yeah, we got a strong economy. Things are going great. But when that 2% CPI is more accurately represented, in my opinion, in the 1982 version of the CPI equation, at 10%, all of a sudden GDP is negative. And we have not even recovered from COVID. You go back and you look on the real charts, we are like a quarter or two away of entering into a depression, like a legitimate textbook definition of a depression. Because when you take out GDP growth and you subtract real price increases, and you don't mistakenly count price increases as economic growth, the zombie economy is revealed. And we cannot put our clutches on a zombie economy, just like an investor cannot depend on a zombie company. You cannot depend on that zombie company to fund your retirement. It's not going to happen. You'll be lucky if it's still there. Well, you can't depend on a zombie economy to produce a high quality of life and standard of living, because it's barely getting by. And the only way to turn this real negative growth into real positive growth is allow Bitcoin to do the heavy lifting. I don't think there's you can't invest in real estate. The affordability problem becomes worse. You can't invest in land and resources, because it's going to take decades to get that to market. We should be doing those things. We shouldn't be investing in real estate, but we should be investing in land and resources. And you should invest in the economy. But you also need to focus on Bitcoin, because it's the engineered design of Bitcoin which will drive value into the economy, drive value into the balance sheet, and put the United States in a more healthy position where we don't have to worry about losing trust. I've never seen us in a position where I'm so excited and I'm so scared at the same time, because I'm like, the changes that need to be made are being made. But at the same time, man, if they fuck this up, it's lost. Who are you going to trust? You're not going to be able to trust anybody. And trust is the variable. Trust is the element that is the determining factor between inflation and hyperinflation of a fiat currency. So we don't want to lose trust, and we're at that tipping point. But I couldn't be more excited for companies like MicroStrategy and for administrations like the Trump administration to come in here and do the financial engineering and make the moves that are necessary to save us. Because if we stand still and do nothing, surely we're going to die. We need to take action. We need to move. We're at the fork in the road. We need to pick which direction we're going to go. And thankfully, I think we have somebody who can lead us down the proper direction and get our feet back up, so that we can have the American dream, and our kids can have that American dream and know that we have the peace and security that comes with the Constitution of the United States of America. That is the most important thing for our generation, to ensure that our kids have those rights and privileges given by God and not government.
What is People's Reserve? What's the origin story? And what is People's Reserve doing today?
So People's Reserve is a market maker for we the people. And really, it came because I experienced the problem, right? So much like a good business, you experience the problem first, and then you realize there's a need for a solution. Well, I bought my house for around 100 Bitcoin, and today I'd be lucky to get 10 for it. So I experienced a big problem. I said, man, I have great memories in this house. It's part of my hierarchy of needs. I wouldn't go back and change anything that I've done. It made sense, and I love my home. However, I've lost a amount of money on that decision, and that created a problem for me. And then the second thing is once I bought that home, at that point in time, I just started wrapping Bitcoin and turning this, trapped equity in the Bitcoin network by wrapping it and freeing it and bridging it and putting it into DeFi protocols. Sure, I added some smart contract risk, but I was also able to create some cash flow. So I don't have to work for the man anymore, right? It's all comes back to this cash flow idea. Well, you know, if I could wrap my Bitcoin, then why can't I wrap my house? You know, why can't the equity in my home benefit me? Why is it always creating a liability for me if I need to tap into it? So those were like the two major realizations where I said, all right, let me see if anybody's fixing this problem. And then, you know, at that point in time, nobody was fixing the problem, but there were a few solutions out there as far as treating Bitcoin as a collateral. And the problem with that was that the people who were facilitating that marketplace thought Bitcoin, and today even still think of Bitcoin as a risk on tech stock. So, you know, you build this lending facility, you go get some LPs, you tell them they're going to lend against Bitcoin. They feel semi-comfortable with it because of the LTV ratios and the immediate liquidity and all the characteristics of Bitcoin. But ultimately, to them, Bitcoin is still a risk on tech stock. It's still a magic internet money that can go to zero. You need somebody who understands that Bitcoin is engineered money, strategically designed to leverage the natural laws of economics and commodity cycles and price discovery to empower its holder. It was designed to do this. There was effort put into making Bitcoin alive through the difficulty adjustment, through the halving, through all of its characteristics. It's the apex predator of monetary assets. Nothing will ever be like it ever again. And my opinion is it's actually the first form of money, the first real form of money for humanity. But where I am on that opinion versus where LPs are on that opinion is very different. But the big thing that's happening now is you go to lenders and you say, look, you can lend your money to the government. That's fine. That's normal. There's no credit risk. They're going to print it out. They're going to get it back to you. You might not know what you're going to be able to buy, but so what? That's true in every lending product that you use. At least you know you're going to get your money no matter what. So you have no credit risk. But then I start to talk to them about the default risk and say, you know, the United States has been ongoing into a soft default, right? Everybody knows that when you have to print money to service your debts, that's a form of default, but it's a soft default. It's not a hard default. The debt's not being revalued or discounted. But what if it is? Donald Trump is actually really good at refinancing debt and going through hard defaults. He did that with his casinos and he renegotiated his debts and he bounced back and came back stronger than ever. Who's to say that if this economic reordering doesn't work, maybe a hard default would work? Maybe a revaluing of the debt would work. We don't know what risk is going to be taking. So as a lender, sure, lend your money to the government, but consider lending to a borrower who, when they default, you actually default into the assets that you want to accumulate. So if you default, if you're a lender at People's Reserve, because we connect lenders and borrowers, if you're a lender into one of our vaults or protocols or contracts, what happens is if somebody defaults, and in our beta, very few people default because we've structured our contracts to mitigate the liquidation risk. So we don't want you to default. We don't want you to get liquidated. But in the case scenarios and beta testing where people did, the lenders are happy because they now have more. They've now traded their dollars. They didn't get back more diluted dollars. They got back Bitcoin. They got back real estate. They got back business assets. This is like, I think the next big understanding for LPs and for lenders is that, hey, default risk is unavoidable, right? Even the United States, like there's something that could happen. Sure, you're going to get your money. But you know what? If I get into the scenario where there's a default, I want Bitcoin and real estate on my balance sheet, not more dollars. And especially if they're freshly printed dollars. So that understanding where you have to diversify your lending. I talk to some high net worth individuals or family offices, and they're always like, look, son, I've been in this business longer than you've been alive. You know, we don't invest. We lend money because you invest money to add risk to your portfolio and you lend money to mitigate risk. But now in the lending markets, risk is being redefined. And that's the understanding that People's Reserve is built on. At People's Reserve, we are Bitcoin maxis building for Bitcoin maxis, and we believe that Bitcoin will redefine the risk-free borrower. They'll redefine the risk-reward metrics of all lending markets. And we've built an ecosystem around that understanding. And the products that I've talked about thus far that we've shared with people, because we've been building for 3.5 years, we have brainstormed how to integrate Bitcoin into a plethora of credit and debt products. but the ones that we've shared thus far are the Bitcoin powered mortgage and the Bitcoin bonds. So we're really excited about those. We've had tremendous amount of demand from the community reaching out, trying to learn more. And we couldn't be more excited because we are set up to go live late this summer. And people will finally be empowered by their pristine collateral. They will finally be able to purchase a home without giving up ownership of their Bitcoin. They'll finally be able to create cash flow without giving up ownership of their Bitcoin. And that is the most important thing that any one person can do for their own personal balance sheet, or even on a company level for their treasury and balance sheet as well.
You know, it's an excellent conversation when you're running really short on time. Where can people find you and People's Reserve online? And we'll have to get you back to continue this conversation.
Yeah, well, thank you so much for having me, Tim. And your listeners will know if they've heard me before, I have a bad habit. I can go on and on and on, but I had a really great time during this conversation. You asked some fantastic questions. And I think what we talked about today is actually the most important things going on in the marketplace right now. These are the things people need to know and understand so that they can be positioned correctly. And if you want to follow my analysis and People's Reserve, by far the best place is on X. I really only post on X, and then the team takes what I post on X and then redistributes it on all the other platforms. So if you want to get what I'm saying at the most current time, it's on X. And same thing for People's Reserve. You can also go to peoplesreserve.com, sign up for our newsletter. And if you are interested about any of our products, fill out our get in touch form. The team will be in touch and will answer any questions or concerns you may have.
CJ Konstantinos, People's Reserve, thank you so much for your time today. Thanks for joining us.
Thank you. See you next time.